A lot of times, the best deals I've done are when there is a lot of uncertainty and things aren't clear. But I will say, it's never that there is no data. It's trying to find whatever data you can and arrive at what I call a can't lose number.
What's up, everybody? Mason McDonald and Dan Haberkost here with another episode of the Big Picture Blueprint, where today it is Dan and myself talking about some of the most challenging parts about land investing specifically, but I think some of the mindset hurdles that we're going to discuss today, you're going to be able to apply into whatever business you're doing. But before we really get into the show, Dan, how are you doing?
I'm good, man. I'm excited that we're into the new year. People are back to work, can actually get attorneys on the phone. Not everybody's out of the office. And so after a frustrating couple of weeks at the end of the year here, we're back to normalcy. So that's good.
Yeah, no, absolutely. Well, and hey, you and I still got deals done in between Christmas and New Year's, which is always impressive.
We did. That's right. You brought the buyer on the final closing of the year, the 9th hour on the 31st. So that was great. But anyways, today's show pertains to something Mason and I, somewhat serendipitously were just experiencing earlier today. And we were looking at deals, totally different deals in different parts of the country, and they're pretty good. I think they're there. At least I'll speak to the one I'm looking at. I'm about 75, 80% confident that, if we get this within 50K of my offer price, we'll do very well. And we certainly won't lose. But there's always that bit of uncertainty, especially when you get out of the little infill lots, you get into big rural tracts or even just big tracts. They don't have to be rural, but there aren't that many of them. There's always pretty much something wrong with the parcel. It's unique. It's not like you can find identical comps. And I always find, and Mason was relating to this, that there's just a heavy degree of uncertainty still, even when we're making the offer. Now I look in hindsight and there's a number of phenomenal deals I've done where I felt like this when we were making the offer, getting under contract, closing it, and then it still ended up being a great deal. And so that's what we're talking about today, is how often you're never going to have all the information and you have to make the offer or act anyways.
Yeah, and this is an interesting conversation because I don't know how many takeaways there are going to be other than don't allow yourself to get caught up so much in analysis paralysis that you never ever get a deal done. Because when there is an increase in competition for the product that you're seeking to acquire, you start having to stray a little away from the herd. Where, Dan and I created a free land investing course in our school community years ago. And I think in the market selection component, Dan, you're the one that coined the term of follow the herd, of look at where all the data suggests, go to this particular market or this county in this state where there's a tremendous amount of transactions. And that's where you go do the deal. And now with both of us kind of focusing a good amount of our time on these rural subdivides, you run into a challenge where there's no data. And it's because you're in these parts of America that farmers and ranchers have been farming and ranching since land got parceled up several hundred years ago. And so there are no, developed child parcel data that you can compare to of what a project is actually going to do. And that gets really, really stressful. And that, I think, is the essence of what we're talking about today, as we're not doing, the Lehigh Acre buy for 15, sell for 30 flip over and over and over again. How we're using certain metrics within our business and how we're attempting to quantify it as much as possible to be able to continue to take action without actually burning ourselves. Because what we're not telling you to do is just make a rash decision, get 70% of the way there and, pull the trigger. But how to keep, business going whenever there's not enough inventory for you to continue acquiring product that you're used to acquiring.
Not just that, but there's so much upside. In hindsight, I referenced the subdivide that you're helping with, Mason. I was uncertain about that. In hindsight, and where we're at now, that's going to be one of the best deals I've ever done. There was a deal I did in 23 in Miami-Dade County, and I was nervous to close this thing. We ended up buying it at 45 and selling it at over 130,000 a few weeks later. And so A lot of times, the best deals I've done are when there is a lot of uncertainty and things aren't clear. But I will say, it's never that there is no data. I guess I haven't done anything where there's no data. It's where it's fractured. There's a few transactions over the years, and a few of them clearly weren't listed on Zillow, and a realtor just put in the MLS after the fact, or someone just put it in for comp purposes. So there's no description, there's no pictures. You don't know did it have improvements or permits or anything like that, and it's just really hard to get clear comparables. But what I look for is when there are listings, or if a listing pops up or there's a few on the market, how quickly do they move? The ones that aren't lemons, because lemons can really throw you off. So that's something you have to watch out for. And then, you know, pertaining to the property I'm looking at right now, that I'm going to offer on after this call, I see a good property, properly priced, popped up a couple weeks ago during Christmas, and there are like 60 saves and 600 views. And again, it's January the 6th, so I'm not surprised it's not pending yet, but that's a good sign. Oh, here's a similar property, what we would be selling. It has an enormous amount of traction. I bet that'll go pending, and I'll keep my eye on it. So it's trying to find whatever data you can and arrive at what I call a can't lose number. What do you think of that, Mason?
Yeah, no, I think let's spend the next little bit trying to define what that 70% of, if you can get to being a C student on the initial due diligence that you're doing to put yourself in a position where you feel, as a C student, confident making an offer. And I think thinking about it macro to micro is probably a really good way to look at things going into the new year in 2026. There's a lot of stuff going on in the world, and trying to apply it to, simple infill lot development, flips and development is a little bit challenging. But whenever you're looking at land as an asset class, I think that you can say, okay, well, what about land? What fundamentals of your investment thesis with land contribute to getting you at least 25% of the way there? Because land is relatively illiquid. We try to take something that's like a pretty illiquid asset and make it liquid by splitting it into smaller, more accessible parcels, by offering owner financing and everything like that. But I think whenever you hear stuff like the US dollar is weakening, take it however you want. I don't care. I'm not offering my opinions on the US dollar. I can talk over whiskey about stuff like that. But when you hear stuff like that, and you can look at different, land asset classes of, and we talked about it last year, of timber property, property that's going to be used for agricultural purposes. Gold and silver has exploded over the last few years, or not last few years, last year in particular. So I think that the basis of the investment thesis gets you 25 to 30% of the way there of, if I buy this property and I were to turn around and resell it immediately, could I hopefully get my money back? And if I'm able to sell it on terms, collect enough interest over the years where, if you're buying 500 acres wherever right now on market, could you resell it in the next year on terms at the same price where your return is, at 8% per year? And the answer is probably. And now that kind of, goes to the flip side of the coin, where we, Dan, you put in quotes here, know yourself, of what is your minimum amount that you need to make. And so if your minimum amount, whenever you're going into this business, is you need to double your money, then maybe this project is not the exact right project for you. But if you're like, I need to make more money than I paid for it, then I think that gets that initial 25 to 30%. So I think looking at the macro, economy, as a whole, U.S. just did something crazy in Venezuela that, China's responding to in a different way, which we'll see what happens with China and Taiwan now that we've set a weird precedent there. I think land, and specifically large rural acreage in the United States, especially whenever there's a commodity component to it, is going to be a really, really great and safe place to put your money. Which, if you're trying to get to the 70% rule and you get 25 to 30% of the way there with that fundamental thesis, then you are, almost, more than a third of the way there.
So, yeah, I think that's a good starting point. And to add on to two of your points, part of the macro is just looking and doing business in places that are growing. Makes it much easier not to lose if there's a lot of people moving there. So when I said, in our old videos, follow the herd, it was somewhat tongue in cheek, where what I mean is the herd of consumers, of people who would ultimately buy your land, not necessarily where all the other investors are going.
Quickly on that, Dan, I remember this was Alex Hormozy and Dave Ramsey recorded a podcast maybe 2 years ago where Alex was talking to, because we're on a first name basis. Alex was talking to Ramsey and he was like, I was talking to a billionaire and asked him what his investment advice was. And he said, I go to a growing city, I go to Main Street, and then I measure 30 miles in any direction from Main Street. And I buy every single piece of land that I can possibly buy. And then I hold it for 20 years. And I think that right there, is, and the returns on something like that of, 20, 30, 50 years ago, if you had bought every piece of dirt that you could 30 miles east of Colorado Springs, you'd be a freaking bazillionaire right now. And so I think there is, just like you're saying, if you're going to where the people are going, but the data is always the same. It's the, 4 big cities in Texas. It's the Sun Belt. It's Phoenix. It's Vegas. If you're going in there and you're buying land on the outskirts of it, you're probably going to be successful. So sorry to interrupt there.
Yeah. Well, and especially from a can't lose perspective, this is where setting up the deal properly, not having a short-term balloon note is key. But the second thing you said that I wanted to expand on was the know yourself. Your point was also good, but what I was thinking with that is, so this whole conversation, I tend to be overly conservative with finances, offers, money, etc. And so if I'm 70% of the way there, I probably should be making an offer, if not already closing on it. Whereas, I'm sure there's some people listening to this podcast that are on the opposite end of the spectrum that might be too risk tolerant and get themselves into trouble jumping into things too quickly. And if that's you, then maybe, again, it's rare that you can have all the information, but you might need to be in your own head at 90% of the way there. So that's why I put that in quotes on my notes here. But continuing along, Mason, what else are you looking for, or are there any strategies you're employing when you're somewhere that you're not necessarily setting the new market, but there isn't a ton of data and you're going to be the first one at your price per acre that you're planning to list because, again, there's just been crappy listings, terms weren't offered, et cetera. How do you go about that? I have some ideas.
Yeah, there's going from expensive to free, or maybe I'll go the other way, going from free to expensive. Facebook Marketplace is a really great place to be able to test a market where you can say, 40 acres outside of, I don't know, San Diego, California, for sale for this amount, and see what the responses are. I'm not saying to, falsely advertise, like you need to have the property, you need to have marketability of the property, so you can test and see kind of what's going out there. But if you post it and you get 1,000 responses in like a 4-day period of time, it shows there's demand there. And now you can do that in a lot of different ways. Without listing on the MLS or anything like that, you can run an advertising campaign through Meta and saying, hey, land sale event in this particular area, and see kind of what the phones do is one way to do it. Calling all the brokers out there. And you have to be careful with the type of product you're offering and the brokers you're talking to. And it goes back to like what we've been saying for years and years, having good local relationships, like go out, take these people out for meals, pay these brokers for their time, and just being able to see, okay, hey, if we were to do this project here, is there demand? And it's something very real for us whenever we're, there's only so much inventory that we're actually targeting, which makes it really, really tricky. And so if you can do some sort of demand testing, feasibility testing, surveying people, you can spend as much money or as little money as possible. I think that's what you need to think about, or different strategies around that, because what kills projects more than anything is absorption rate for development deals and buyer financing. okay, I want to build, a luxury 15,000 square foot home in Walsenburg, Colorado, because I can see that a 15,000 square foot home that, got permitted in Aspen is going for 40 million. I want to do it in Walsenburg, Colorado, but there's no one on the planet that wants a 15,000 square foot home. I think, that's one way to think about it of, if the project meets the requiring of end buyer financing, that's one way to look at it. And there's a good amount of demographic data in all the different parts of the country that you're able to do that. Where if you're looking outside of like the Piedmont Triad and, I don't even know which Carolina, North Carolina, there's a lot of tech money out there and, there's, potential desirability out there. So I think, I don't know if that answers your question, but it's demand testing at the end of the day.
Yeah. And one way I've done this, and it only sounds planned in hindsight, but the big parcel that you're helping me with that I bought last year in Colorado, it's going great. We're selling higher price per acres than I expected. And one way that I had confidence to do that is I had flipped just a few individual lots that year recently that were, what we were going to split the big lot into. And then the big lot we were buying was a little bit closer to the main road. So I felt really confident from that experience. Okay, I don't know how quickly we're going to be able to sell these, but I know there's demand because we got a good amount of inquiries. They move pretty quickly. And I think this will work, right? And so that's one way to test a market. If you're looking at big tracts of land in an area, but you can't pull the trigger, it's a big deal. Can you go do a few small flips there, market for some little parcels and just see how it goes flipping them? But I also want to highlight what you said about the local broker, because that has gotten me so many deals and gotten me into areas I never would have touched otherwise.
Yeah, absolutely. I think another free resource out there is, Dan, you and I in this county that we're talking about, between the two of us and both of our companies, I mean, we've sold a lot of land in these counties. And if you go look on Zillow,
It's nothing.
It doesn't show up because we sold it off market or transaction brokered it or, whatever it is. And so if you go to the county assessor website, in just about every county, there's usually a sales data thing that you can click on, and you can filter by a good amount of, okay, well, I'm not seeing anything on the market, but, Dan, 3/4 of a mile, I transaction brokered 160 acres between two neighbors, right down the street, and they paid, market price for the land. Mm-hmm. And so whenever you see neighbors being willing to pay, it means the neighbors have money, which, increases confidence. So go to the county assessor website, look at the type of land for the type of project that you're doing, whether it's a single flip or a development deal, and see what's out there, because not everything is going to hit the market, especially with, the way a lot of these rural land sales have been going on for the last century, really. Yeah. You've got friends that were selling land, in a booth on the strip in Las Vegas, where, you're not going to be able to find that data anywhere except via the county. So I think that's another resource for you to be able to start testing your theory to see if there's a market for what you're trying to do.
Yeah. And unfortunately, you can't be lazy here, because you have to look at, well, are these properties actually similar? It sucks if you're to the point of doing what Mason said, because you need to pull up the properties and look, because, again, using this one as an example, there's a parcel that really throws off the comps. When I look at what it sold for and how long it took, I'm thinking, am I off? And, oh, well, turns out it was covered in wetlands. And sometimes, if you're lucky, there'll be a sold on Zillow and the old listing will be there, and you can quickly read through the listing and see they mentioned lowlands and know, okay, that's why. But a lot of times that's not the case. And whether it's terrible road frontage or, there was one, I had the same thing happen. I was looking at a big parcel in Colorado that we're buying. This is the most expensive parcel I've ever been involved with. And I was with my investor, and we see these new listings come on right down the street at a price per acre that's concerning. I'm like, oh my gosh, what's going on? Am I, of course I'm panicking because he's trusting me. And we look into it. Oh, they're easement access 1 mile off the road. Okay, that makes sense. And so unfortunately, you can't just download a spreadsheet of numbers price per acre without looking at every lot and making sure it's actually comparable with access, with soil, with, that's another one in the Carolinas that's big, is soil quality. So a lot of this comes down to the unfortunate reality is this business takes a lot of work, a lot of tedious work. So yeah, I'm not even sure how I got on that rant, but that's an important thing to keep in mind.
No, and I think for us doing a lot of business in rural America, you read the headlines, and um, I was on a call before this talking about land, and people in the comment section were like, "What about data centers? What about solar?" And these solar companies and these data center companies are able to pay a tremendous amount more money, on a price per acre basis than the average retail buyer of, the person that wants a hobby farm or the farmer, whoever it might be. And so you have to really understand whenever you're looking at the data of like, okay, 160 acres sold for $1,000 an acre. Awesome. That's a good basis for us to, kind of establish for what this acreage is selling for. And then you look right down the street, 160 acres sold for like 14.5 million. You're like, what the hell is going on with that particular one? And it's like, oh, it's adjacent to a substation. It's a solar developer that had it under contract to buy, paying on an annual basis, for a lease of a feasibility study. I mean, we did that interview with Dakota maybe 2 years ago with Community Solar Authority, where he talked about it, of these farmers that tie up their land with solar companies for 10 or 15 years for the infrastructure to come into play, where the solar company then buys the land at a ridiculous amount. Or maybe it's a developer that, they went through the entire entitlement process, or did the zoning changes that, came through. So it's really getting nitty gritty with the data that is available that starts giving you more and more percentage points towards that 70% confidence, for you to get to. So understanding the data, look at, demand testing, seeing end buyer financing. I think those are all, big numbers that get you closer and closer to that feasibility of whether or not to take on a project. And what we're actually not even talking about here is we're not even talking about the acquisition. We're talking about making the offer. Like and that's the beautiful thing about real estate in general, is for a lot of these properties, like, you don't have to do every single ounce of this work to make an offer. There's a lot of this work that can be done in an hour or two for a property, where you can make the offer of like, okay, this is what I think, the basis of, the maximum amount I can pay for it is. You do it, you get it under contract, and then you determine, shoot, it's going to cost $10,000 per driveway permit, to come off the state road the state highway road that I didn't factor into my pro forma. So I can either do, one of two things of, hopefully you built into the contract that the earnest money is refundable for 60 days or something like that. And you can say, hey, I found this out during, our feasibility study. We're going to have to renegotiate, on this property to subtract the 50,000 in driveway permits, or we cancel the deal. But I think getting to that offer point is just so crucial, because the stakes are actually really low. And I think that's something that most real estate investors never act, or, people that are attempting to get into real estate never even get to the point where they're actually making offers. So you need to be informed in it, but, realize in general, like, that's what a due diligence period is for, is to figure out all the extra stuff to get you to hopefully an 90% plus confidence that you should take this project on.
I'm glad you pivoted into this part of the conversation, because I had this on my note sheet too of, I, again, can wait too long to make offers and cost myself. I mean, there's a deal that your company bought that I'm still pissed about, because they just offered sooner. I saw it decently high above what I wanted to offer. I thought, oh, no one's going to buy this. This is so rural. I'll just leave this and check in 3 months. And in 3 months, you guys bought it. And it was a decent deal. It wasn't anything amazing, but it was certainly worth buying, and I'm sure you'll make some money on it. So I am working on making the offer faster, but what you have to balance there is you can't be so far off that you come back and try and renegotiate 20% or 30%, because then you're just wasting your and everyone's time. You can get yourself into trouble, right? Especially as you get into bigger properties and people with more money, you want to be more careful because litigation becomes far more normal as you get into higher price points. And so I don't know, maybe this is me being overly cautious, but so how do you, and I'm going to answer this, I'm asking the question, how do you think about getting to the point of being able to make an offer? And everyone I know that is really experienced in their respective niche has some simple rules that as long as it makes this rule, all right, we're going to take the step, we're going to make an offer, and then we'll do the nitty gritty due diligence, the soil tests, and et cetera. Right. And so for me, and, taking this from some of the people I've learned from, I want to be at least 1.5x my purchase price per acre for a sales price per acre for really hot areas. And then on the slower side, I want it to be 2x. And so like this one that I'm analyzing right now that I'm going to offer on after our call, after our podcast is somewhere in the middle. It's not the hottest place ever, but it's certainly not slow. So I'm shooting for at least, in the middle, 1.75-ish X. And I've got a decent confidence from the comps I can pull that we can hit that. And I don't know for sure on the soils. We definitely need a soil scientist. I definitely need my realtor to walk it and check some of my assumptions around the existing farm road and making sure it doesn't need improvements. I had a preliminary conversation with the county, but I need to have a more thorough one to make sure exactly what we're planning to do is feasible. But we're definitely to the point of being able to offer, because the most fundamental thing, which is price, I have a high confidence that, okay, if we get it at the number I'm offering, we're close to, I think, 2x actually, maybe even 2.1 or 2.2, but they're probably going to negotiate. Maybe I'm being overly optimistic on the sales price. So that leaves me a margin where I'm pretty much certain we can't be lower than, 1.7, 1.75x purchase to resale price per acre. And so that's kind of the simple rule I use, that once I get a confidence there, the other due diligence can be triple checked in the due diligence period. Any thoughts, Mason?
Yeah, I think it goes into a conversation we've been having for a long time, going back to like the neutral letter versus the blind offer, where say the property's worth $100,000, you offer $35,000 on a blind offer, but you would have paid up to $60,000 for it. They see $35,000, they're insulted. They're not even going to, call you back to shred up your letter. As versus the neutral letter where it, gets a call, gives you the opportunity to negotiate. And so specifically with on-market deals, it's really hard to find what that number is, where typically if the property's been on the market for just a little bit, if you go in too low, what I'm seeing of, my last half dozen offers, they're like, no, sellers, won't entertain it. And I'm like, oh, well, what's their counter? And they don't even have a counter, which is tricky. Of like, we probably could have offered a little bit more to get a counter out of them. And so you're dealing with human emotions here. So it's like, you've got this formula of, at a minimum, it needs to be, a 1.5x deal on what we're spending for it, ideally a 2 plus deal. And so that offer price where, it gets, this is where the art of the deal really comes in, because there's these properties where it's like, we're really close. And now I have to generate another offer of, well, why didn't you just offer that in the first place? So I think it gets really challenging to a certain extent, but at the end of the day, like whenever, the property is on market, your fundamentals of investment shouldn't change despite what the property is listed at. Mm-hmm. But you don't want to be the person that is always renegotiating or sending offensively low ball offers, because then you start, developing a reputation in the community of, oh, don't listen to Mason. Like his offers, it's trash. And the problem, going into off-market only deals to on-market only deals is like there are so many egos at play. And so I think rather than, focusing on the number, you have to focus on the relationship with the listing broker, because if they're getting listings for the type of property that you want to make sure that they're on your side and saying, look, the number's off, but it's a solid cash offer with a reasonable due diligence period here. So you need to definitely consider it, because brokers, while they're required to present the offer, they might present the offer in a way that makes it really not compelling. to accept of don't even bother accepting. I'm, presenting this because I have to, just say no, type of thing. So, it doesn't exactly answer your question, but it just, explains some of the nuance of it of, hey, don't be, don't go offer $100,000 for the property that's listed for 1.9 million. Like you're wasting everybody's time. Talk to the broker, get to know them though, because the broker might let you know of like, hey, they're actually, I know we're listed at 1.9, but like, I think submit an offer, submit, your highest and best, and, we'll present it to them and, see what they can say. So there's an art.
Yeah, that's a great example. You pivoted towards what I wanted to say, which is, how do you feel out where the seller's at when you can't even communicate directly with the seller? And this is where being good with people is really useful. Or, in the case of the one that I'm offering on after the show here, one of my realtors, turns out his broker knows the broker that has this property listed, and they've known each other for a long time and they're friends. So that was a super useful in. I got that guy to call the listing agent who he knows, and he volunteered a lot. His words, looking at my notes specifically, were, "We're flexible on price." And when I look at the listing, they listed it really high at first. They had it at 1.5 and they dropped it all the way to $1 million. So we're going to offer 750. And I don't think we're going to get that accepted, but I don't think that's going to be so offensive that they tell me to F off and that they don't even respond or anything like that, or where the broker presents it like it's not a real offer. So a lot of it is talking to the seller. I had another one in December. I think it was listed at, I want to say 600. And this thing has been listed on and off for like 4 years. And my realtor talked to the realtor, didn't seem super motivated, not real friendly, didn't really want to talk about the property. And so I said, whatever, go ahead, make an offer at 400. But we didn't even get a response. I doubt she even presented it to the seller, honestly, which is technically illegal, but welcome to reality. And so like in that one, I pretty much knew at that point, just from the conversation with the listing realtor, that it was going to be a waste. But I figured my realtor really wanted to make an offer, so I said, go ahead. So feeling out the listing agent is really useful. And a line that I like, whether we're dealing with direct to seller or direct to the agent, is, look, we're probably not going to be at your number. We're going to be off. Should I even call you back?
Mm-hmm.
And usually you get a really useful response of, yeah, okay, call me back. A lot of the sellers, when you're dealing with them directly, are a little more emotional about it. And then the brokers will go, oh, yeah, they want to sell. Give us your best. And that really opens the door for you to make that offer and gives you an idea that they are interested, even if it's lower.
Yeah. Yeah. No, I think that's a really good line right there, Dan, because it's amazing how often it happens where the property has been on the market for 4 years, and it's because the seller is delusional. And, it's tricky now that I'm a broker, being on that side of things, working with delusional sellers of like, you want to explain it like from an investment standpoint of like, dude, your opportunity cost not saying yes to these offers, you are losing money because there are not buyers at this level. And so it's playing to a lot of ego. It's ideally getting direct to seller, which is just a consistency game of, we're bringing blind offers back because we've targeted the, it's like 11,200 properties that we'd be interested in buying over the next decade. And we know what we can pay for them. So we're going to just, keep dialing the blind offers on that and, mixing in neutral letters and, cold calling and everything like that, and working with brokers whenever it makes sense. But having a, firm grasp on your numbers really goes back into, what this whole show's about, of just making, achieving that confidence to be able to actually even make the offer. And, if you're brand new, I think a big thing is, if you're a wholesaler, for instance, and you're, working with someone that's a buyer, like, understand their numbers and then really dial it back so you can start understanding the numbers yourself. Because I have wholesalers, submit deals to me that are, 2 to 10x what I can pay for it. And then they start trying to justify their numbers. And I can tell that those people are not going to have a lot of success, because that right there of, that will kill the deal, is whenever, you attempt to be as conservative as possible. And sometimes we're so conservative that, we don't end up getting deals. But if you start trying to fudge the numbers on you know, a subdivide deal to justify it to someone, that's done a lot of them and you have never done any of them, your underwriting is screwed up and gets really, really wacky. So while we're saying, get 70% of the way there, make the offer, and then, try and get to 90%, we're not saying start manipulating the numbers in order to make yourself feel more confident. That's the worst advice anyone could ever give.
Yeah. Well, a couple more thoughts I have. Being able to offer terms is really important to being able to stretch into new markets, because, just regardless of what state or what type of land, whether it's been infill lots, medium-sized acreage, or big acreage, I've never gotten stuck so far with anything being able to offer terms. Eventually, I get it sold, even when I've made big mistakes. So if you're buying nice, desirable land and you can offer terms, that is a big part of this. And here's the best part of this whole conversation. When you take the leap and you buy properties where it's really not clear on Zillow and the MLS that there's demand and that the prices will sell as high as you want, well, then you have essentially insider information that little to no one else knows. And so that doesn't last forever, but I've gotten to that point a number of times where I'd done deals. There wasn't much data showing that I could sell as quickly and at prices that I'm selling at. And then you can just buy everything you can in that window. So that's really the beauty of this, and going into areas that are slightly more ambiguous. We sold one last November. I think we bought it in September. It closed to sell in November. I remember when we were looking at the due diligence, and I just was not sure. There was not much comparable data, and almost all the solds were like just wrong. You run into these confusing sales where it says 1 acre sold at 800, and okay, maybe it was a house, and vice versa. I'll say it says there's a huge acreage that sold for next to nothing. And the only reason we had the confidence to buy this, it was 5 acres, is we had a local broker that was just an absolute expert in the area. He knew definitively. And he's like, oh yeah, it'll sell, no problem. Let's list it at 70. I think I ended up selling it at like 60 or 62. A couple days on market. We bought it at 30. There was pretty much no on-market data that let us know that was feasible. In this whole conversation, it's got to be nice, useful land, right? If you're uncertain, you're not finding clear comps, you think the demand is there, but again, you're kind of shaky on your ability to resell it. One of the biggest things that'll make sure that you at least preserve your capital and don't make a big mistake is that it's not crap land, right? It's not covered in wetlands. It's not got horrible topography or soils that aren't suitable for traditional septic. In all scenarios, do the basic due diligence, right? The big piece of land I bought in Colorado that I was uncertain about, well, there was power along the whole thing. The one I'm buying that I said is the biggest I've ever bought, prime paved road frontage, a main highway, power's right there. We have to extend it, but we included that in the numbers. It's a really nice piece of land. And so even if, a little bit off and it doesn't sell as quickly or as high as I want, the fact that it is nice, desirable, usable land really hedges against the downside. And so that's a key point of this whole conversation.
Yep. And recognize what nice and desirable means in one market is not necessarily the same in the other market. Of, the paved road access with electric along the whole, property or easily extendable might mean a lot in one particular market, depending on what the end use is versus another market where it's like, well, what's the hunting like? Is there water on the property? Is there, a food source for the game that we're hunting out there? And so really, fundamentally, it's understanding the market, understanding the data out there, and understanding, from macro to micro, the indicators that make it so where this is a feasible project for you to take on as a land investor.
Well, I think that's good for today, Mason. I don't really have anything else to say. I'm going to go offer on this property at $750 and see if we can get it.
There we go. Awesome. Well, thank you everyone for tuning in. Mason McDonald and Dan Habercross with the Big Picture Blueprint signing off.